Good morning, good morning. Just watching for your offer to be here into 50 to 70. If sell side is gonna be able to make a lower high, that's just your value low to POC of your previous candle. Um, so far, we've been reverting on the day, where we're just trading back to our VWAP over and over again. Very balanced morning so far. But if this 50 to 72 can hold as offer, then we will look down and break out of this range. So just keep an eye on that. There's someone very clearly buying down here, but the sell side is above us at this 50, really trying to defend. Pushing into this 50 to 70 now. This is where we watch to see if sell side sits or if we'll revert back up again. We've been balanced for the entire morning session so far, finding reactions into our distributions, our deviations from our VWAP. This is now VWAP here into our 70. This is POC previous candle. If it's going to sell, it'll be here. And then we'll look for the pushback below 50 for anything more. If we're going to fully revert, we'll go back over 70s and then we'll head back up into 900. We got a slight reaction off the 50 to 70 for the rotation back down to our lows, but hold of our lows and rotating back up. Should head up to 900, 920. Balance persisting, sadly. Again, like it's just we're just holding our deviations and then heading up. Reversion holding on our lows. Upper target 934. First target here is 905, 94. See what happens in this deviation high. Again, like we've just been reverting. That was our one chance for that sell to work there. And it did, but we didn't get a new low, which sucks. Now we'll rotate up into these highs. Should see 20 to 40 here, I think. This will let us know if we're gonna do the upper rotation now. If we can flip our pivot, hold here, and then go up into these highs. Watching to see if this holds and then heads up into our upper deviation, or if nothing's gonna change here. This is an interesting open. Just took off my first risk here into our highs at 900. Secondary target is sitting at 920, and then I have another limit at 940. $920 was just taken as well. So that's 2 targets down. We're adjusting runners now off of our flip of our pivot and hold as we push into our upper distribution. What do I see higher time frame? I don't see anything higher time frame. It's just balance right now. Like it's, do you see what I mean? Like we're just trading around view up right now. And so like the failure to shift below and hold has allowed a rotation up into our highs until we can breach either above our reversion or below our reversion and hold outside of value. We should expect a sell into these highs. It's just an inside candle, right? On the 15, we have 3 inside candles. This is our day so far. So I can't really say anything until we figure out what we're gonna do here. But looking for anything other than balance, right, is kind of a fool's errand. Unless we're going to hold a very clear lower high or higher low, right? Which is what we tried to look for on our first look on the day, again, which was here, which was a 1-to-1 profitable trade, playing off of the 50 to 70 for the rotation back down to our lows, but we didn't get follow through. And now we're watching to see if we get anything new here, or if this is going to rotate back down, which again only makes sense. It's balanced right now, so we'll see. I guess, Maldito, what we could say on the higher time frame is that we gap down. So if sell side is going to continue, then as long as we're holding below like 940 to 960, sell side is in control, in my opinion. If we can start to show interest above that 940, 960, then we can look for the gap to be filled from Globex. But as long as that those highs are maintaining, then downside is still in control, even if this just balances here. That should lead overall to a break of our lows and then a continuation down. I guess that's what we could say for higher time frame. But really, it's just balance. I'm not really looking for anything crazy until we see either a pop above and hold or a pop below and hold. But I'm still in my long runners here with us holding the mid. I'll probably get stopped out full, but it'll be okay. It's hard to hold runners on a balanced day looking for expansion. But when it happens, it's worth. Offer sitting at 20 here. What's up? Pretty clear balance right now, Sauce, between our value, high and low. Anything outside is excess. Just like we're just reverting back to VWAP over and over again, outside of our deviations from our low to high. Your sell side is sitting at 910 to 940. Your mid bid is 872 to 850, and your low is 810 to 780 right now. Those are your three levels. If you're short from the highs from our top of range, top of balance, this is your first risk off into our mid. 50s are trying to flip, but bid is still sitting there. We're watching to see if we get the full rotation down to 810s for secondary targets. There's really not much else here. We either do one of two things from our highs, right? We either bounce here and then rotate back up, showing interest in the mid, or we'll flip and then come back down to our lows. And then we do another balance rotation, or we'll fail and rotate through. Unsure. It's balance. Still another inside candle. Like I said before, if you're trying to hold runners for expansion, the odds of you getting stopped out are pretty high, but I still think it's worth it to hold a runner always, just in case. And there's your flip. See if we do the full rotation back down to 810. And this is our rotation down into our lower distribution off the failure at the highs. Another balance rotation. See if we find a bid down here, or if there's no change. We would need to flip 810, 780 for any sort of breakdown. Until then, right, like these are our lows. Are you guys on the same page? Do you get what I'm saying? Okay. I know it's a weird change from yesterday's crazy volatility to now just balance, but you know, it is what it is. I don't want you getting caught not just like respecting inside candle after inside candle. It is definitely still, yeah, but it's very range. We have no trend. That's all I'm saying. Yeah. Uh, 40 seconds till new 15s. Into our lows here now. See if we find a bid in these lows, or if we're going to be able to continue downward. We would need to see 810 like hold offer, I think, for a breakdown into new 15s. If not, then we'll rotate back up to 850 off of a look back over 810s. Same thing with the S here. It's like, gotta flip this pivot. Took out lows. Now we'll wait to see if this is going to, this was just a stop out, and then we'll rotate back up, or if our runners can continue to run here off of our flip of our 50. It's up to you what you want to do. I'd like to see either, like, you can either try to hold your runner, right, like I said, or on a flip back over 810s, we can look for that bid back up, and then play this back up to 50. As long as this 780 to 810 is holding, though, I don't think you have anything to worry about with your attempt to look for a runner with the breakdown. But if, again, we pop back over 810s, I think it's just another failure. Rotation back up to our mid here off of a failure to push below 780, 810, getting your pop for your reversion trade. This is our value low of our previous candle. ES also into mid pivot here into our 72 to 76. This is your first risk off for the reversion back. Again, this is your first risk off for your reversion back. If we can flip 50 to 70 again, then we'll rotate back up to highs. Yeah, I mean, I don't know why you're not trading MNQ, so you can scale out. There's no reason not to. It doesn't look as pretty, but it's worth it. Like your charts are gonna definitely look messy with your exits, but being able to like take off in the mid and then have scaling it uh, like my targets are always gonna be like 910, and then 940 on the break above for limits, and then I'm just like I move my stop up as we rotate, and then just into our lows, our 780, 810, where we'll buy until we can flip and hold it. Plus, like then that allows you to scale if we do get any sort of expansion. Again, 910 here is RPT. If we can pop above this, then we'll look for 940. We are here, is what he's actually saying. Uh, yeah, I mean, it's just the PVZ indicator thing, but yeah. Just into our highs here. This is our 940 to 910 area that we were talking about. If we're going to pop higher, we need to see a very clear flip and hold of this, in my opinion, or there's just going to be another reversion back down. Again, you can try to stay in runners, but if we start to show any interest back down below our 910, then I'd expect us to just rotate back down to 850, 870. Need to see a very clear hold in these highs for anything new. Understand that our reversion again is just back to the 70 for the POC hold of our previous candle. We want to see a very clear bid and hold into these highs if we're going to continue higher. We can see that there was a buyer who is attempting here at this 900 edge, and that our offer is sitting at 920. But I don't know. We'll see. Expecting anything different is a bit rough, but it's worth, I guess, trying for expansion if we do get it. But so far, no interest as of yet. I hate, but okay. I'm trying to like really keep these charts clean. Back to POC, a previous 15-minute candle after holding our 910 to 840. Again, like there's just really not a lot here. We're back to our mid here off of a failure at our highs of balance. Again, this is POC, a previous candle. And just our deviation high, right, off of our VWAP, off of another failure to breach and hold. So we have one or two options, right? Like this is now going to reject and then rotate down, giving you another rotation like so. Or it will hold here, and then we'll look for the break and push higher. So let's see what we do into our mid. But just a very clear red zone, green zone, mid zone with our deviations holding on our VWAP here on both ES and on NQ. Just around our reversion zones, right? PVZ is made for these markets. Yep. I would suggest that if you're not great at trading balance, that you are only interacting at our edges, our red and green zone, and then you are taking profit into our yellow zone. If you are a bit better at scalping, then you can try reactive plays off of our flip of our 50 or our 70 for rotations back up. But other than that, if you aren't that great at scalping yet or understanding like market conditions, then I would just play off of your green and red and look for reversions back, right? You play the top edge or the bottom edge until we see a flip of set edges and hold of our pivots. Like this really isn't complex. It's literally a rectangle. So if you are failing to make money in this area right now, it's because you're looking for something that doesn't exist yet, right? Which is expansion. So just trade at your edges and have limits on either side and let it be, right? Like don't overmanage your positions. Right? Like this just becomes your like I mean again, like I don't know how to simplify it more than just a red box and a green box. But like this is your first risk off into these areas, and then you look for full rotations back up for secondary targets over and over again. Yeah, until we see something new. If you're more advanced, it's just like with the look below, we then look for this to become our risk for the rotation down, right? That's all I'm saying. Is like if you want to play off the yellow, then it's something like this. And it's the same thing on the flip. From our hold of our green zone, then you look for the pop back over, and then this 50 to 70 becomes your supportive hold for the continuation up. But like it's one of those things where you have to be able to recognize when we flip. So does it make more sense to just play off of this VWAP flip for this rotation back down into our lower deviation? Or does it make sense to just play your top edges into your value high and your value low, and then just play the rotation back and forth between our two pivots that we've already designated? I don't know. I think playing your top and bottom edge just makes a lot of sense. And until we can flip and hold over 940 or below our 780, just look for reversion. And again, like I said, you can try to hold a runner, but you just keep your runner at break even, and then you wait for the next trade until we get to the other side of the edge, right? Like, I don't, yeah. Having a 100-point balance is kind of nuts. That we're just kind of respecting. It's interesting. I mean, like, I'm not mad at it, but like, this is so odd. took my first risk off into 820, secondary target 810s, just to make the trade risk free from our 50 to 70. Coming back down into our low pivot here off of another failure at our highs, and now rejecting our mid. We know the bid sits here at this 810, 780. Until we can flip it, it's the low. We'll look for another reversion. Same thing on ES as we rotate down into the POC of this at 64. Just watch to see what happens here. Sell side defended our mid and is holding view up as resistance. Yep. If balance markets aren't your thing, then you might want to come back later. New 15s have opened. Opening below POC previous candle on both ES and on NQ, coming back down into our low balance, holding our mid, no change, no change. And this is your secondary target here into 810s. Now again, same as before, you can try to hold runners to the break and push below 780 and hold of 810s for continuation down, or you can look to see if we're going to absorb here once again and then rotate back up off of it for rotations back up from top of balance. This is our edge. We have to flip this if we want to see expansion, or we expect price to just revert back up. Alright, coming into our 780. Now this is where we watch to see if we flip or if this is where we hold. If we get back over 810s, then we'll look for a rotation back up. But if we hold this now as offer and then can build below, then we get some downside, and I'd be looking for like 720. If we flip back up, then nothing has changed, balance maintains, and then we go up. Note that POC of this current candle is sitting at our 810. Watching our edge as we push back to retest. This is our 780. I'll watch to see if offer sits here into 780, 810, or if we flip back up and trap these sellers below. Same thing on ES. We're just watching to see if we get back into balance and then rotate back through it, trapping these traders off of a failure to hold below, or if we're going to be able to maintain our edge and then continue downwards. Should be pretty obvious on this test. We'll see. Right? Either we are making a change here on a break of balance for an expansion, or we are making a look below and fail, and then we will rotate back through. What's up, club? Holy, get me out of here. I'm out half here for break even for our stop. See if we get more. I'd like to see full rotation for the full trade to play, but I'm taking off just to make sure that we are at least covering our stop here. Get me the hell out. Good bit of 810s, rotating up to our 850. No change. Just back inside balance. Seller is very clearly sitting up into the mid. This is POC from our sell side. Again, it should be your first risk off for your 1-to-1, and then look to see if we can run for the full move. I hope you can see that this is the 1-to-1, right? Like I just said. And then you have the ability to then hold for the rotation up into the highs, making this then a really great almost 4-to-1. But until then, we'll see. Back to our mid here, off of our hold of our 8-10s. Again, trade should be free now. We'll see what happens if we get the full rotation or not. We have 1 minute until the 15s. Holding POC of previous candle back into our range, into our mid now from our hold of our previous POC and recovery of our balance low. Now at our balance mid. This is VWAP as well as our mid. Again, great first risk off if you're going to cover the stop from 810 to 580. And then for the full rotation, it's just a push to 910, 940. Yeah, it took fucking long enough. gonna fall asleep. Holy. See if we get a flip now. Holding our 810s offer. See if we can flip this 780 now that we've been stopped on the remaining contracts. Rotate back down off of a mid rejection. Oh, excuse me. We'll see. New 15's opening. Never mind. I thought it was a new 15, but it isn't. Offer sitting at 810, 812. I just want to see us basically continue to fail here and then rotate back through off of our VWAP projection at 850. And now we want to see a lower high very clearly be put in 810 and then offer below 780 and hold. We're looking for the flip. The attempt is happening. Let's see if they can do it. Offer sitting heavy at 780. 790. 787. We're watching to see if we can build like this or if we flip back up. Yeah, POC above us, right, into these highs. So if you're uncomfortable playing off this 780, watch for the offer at POC of this candle, and let's see if we can then continue down off of that. But again, like, it's just the bottom of balance. Like, we really just, like, there's nothing to do here until we can either hold 810s and then look below 780 on a very, very clear hold, just like before, like this. Or we'll just continue to eat here, and then the more times we fail in this low, the more likely upside is compared to downside. If we just continue to see a complete lack of initiative. Excuse me. So we'll see. Again, offer is just sitting at 810. As long as that's maintaining, I don't care. We can just move this over. Just get me out of here, man. Got stopped too frequently today. Yep, well, it's gonna happen when you're not just respecting your edges. It's rough, but it is what it is. Balance days are tough when you don't just like set RR and just let it play. It is a very tough day if you don't just set your risk and let it be. What's up, Kiz? A day like today after our move yesterday is just like such a funny joke. It's like making, it's just like ruining people. After the excitement of trend, everyone looks for expansion, and then expansion never happens, and then we just rotate balance all day, and then everyone just gets stopped out over and over again instead of just playing the zone to zone and then just letting it invalidate. Just don't over leverage and you'll be all right. Like, you're gonna take more stops on a balance day because of invalidations, but like, just play zone to zone, man. Like, there's nothing else to do. Yes. Well, in volatile markets, you have to have a wider stop regardless. So with a wider stop, you want to be trading less size. If it's low vol, then you can trade more size with the tighter stop. But if it's higher vol, you need to be trading. You have to have a larger stop with just less size, and it doesn't matter because we're in a 100-point range, right? Like, you're gonna make the money back. And again, like the risk here is that you know, full rotation back up is almost a 4-to-1 playing off of these lows. And if we flip this, you have a very clear 1-to-1, allowing the trade to be break even, just back to our mid. So it's one of those things where it looks frustrating, and it can be frustrating if you're trying to time it perfectly. But if you just like again, like this can be just allowing this to play and looking for these rotations below can be positive in either side. Like we know what needs to happen. We know that we have to stop here below, and we know that A10 needs to hold, and we know we're looking for this rotation below, and now we're getting that, right? As long as like we're playing zone to zone, none of this matters. Like it's just like this, again, this is now our 1-to-1. Just like allow the zone to play. I don't know. I'm trying to, I don't know, man. So I guess if as long as we can't get above A10s again, like this market's cooked. New 15s in 1 minute. Just coming down to target here into 720. Held our mid is our offer. Again, trade is 1-to-1 now. Yeah, well, that's the biggest issue is like having a mechanical stop is great, but you also then have to have mechanical targets, right? Because if you are emotionally exiting positions when they're positive because of your, but you still have mechanical stops, your RR is going to be very skewed, right? Like, because you're not actually, and RR is risk to reward, right? Like, just in case. But like, let's say that we chop for, you know, 10 minutes here, like we did, where we're just in our red here. You then exit prematurely as soon as we're green, which then skews your risk to reward, and you're now emotionally exiting into these highs without letting the trade structurally play, right? So now, no matter what, you're now exiting prematurely after being in a red trade for longer, or a trade that hasn't gone to target yet, but hasn't invalidated. And so now it's like, okay, well, I'm exiting prematurely, and I'm stopping out, or I'm exiting while nothing has invalidated. And then when we go back up, then I'm taking an emotional entry afterwards. Like, you just gotta let shit play. Like, chop happens. Moves don't happen immediately always. And to be impatient and not let things structurally play out just is going to screw you. Like, you have to, like, if you're gonna have a stop limit, then you have to let things run. I don't know. I just, this is why I really am a hard believer in, you know, like, I think like the best thing you can do is you could trade 2 or 3 contracts, micros, and then taking off your first risk for 1-to-1 for your stop, right? So if we go back fully on your stop, then the trades break even, and then you allow one runner to then continue to run, allowing that gives you then the ability to build profits, to build and compound your gains. Just let that thing go. Or you can trade 3 and you take 2 off on 1-to-1, and then you keep your stop break even on your third contract, which means that even if we don't get the extended move, you then are still profitable in the trade because you've taken off 2 contracts and then you leave 1 runner as your stop, right? So then you've taken off 2 of your 3, which is then immediately always going to be then profitable for the entire trade on upside, right? Like, so you've skewed your risk to reward there by taking off 2 into first target. It's you have to like, hopefully that makes sense. But taking off more into first target and then like letting then your runner to just kind of like be can be very helpful. I'm taking off a little bit more here, guys. We push into this. This is now full pathing for our downside off of our failure at 810s, and then continuation down off of our hold of our 780. Yeah, no, like that. It's really important that you do that. Like, I mean, for your mental sanity, right? Like, and it's also like trading micros on today. Like, you can take off some risk in sets of like the way that I do it is that on days like today, I trade 10 or 20 micros, and then I exit my position in lots of 2 as we push up, while still maintaining a clear stop. So like this is like, it's gonna look like I'm over trading here, but like nothing about our pivots has invalidated. Here. Right, so like we've identified our zones. And you can see like I'm closing our short, sorry, I longed on our flip of our 70. We rotated up into our 910 to 940, which is our offer. I then stop out at our 850. I then add to that position. So my stop immediately adds me to a short. And then we continue to add, and then we play this down into our lows, which is our 780 to 810. We're then adding to this position, taking off into our highs. You can see I stop out on my runner here below our 850. We then add to this because we never invalidate above, and then we play this down. And then you can see again, I stop out here again off of the failure at 810s, and now I'm in the short from my stop out. I never added to this position, but we never flipped 810s. You see what I mean by set risk? So my stop is still here. We never invalidate. I let this position play because we broke our lows. I'm not going to do anything else. I'm just going to let it be. And then we play it down. I have set risk on either side. I just let it be. It's just what we have passed. And then I'm taking off for 1-to-1. And like I have 10 micros left, and we're up $1,300 in unrealized right now. On 10 contracts left, just by playing our pathing and allowing it to be. But like if you get emotional, like this, it can be really rough. But just like play our pivots. Let it be. And if you can't do that, then like balance days aren't for you, and it'll be all right. And just come back on another day when we have better price action. But just like have set risk, allow that shit to play, and then move on. Let your runners run afterwards. Now that we've taken off for right, like this is now in profit, and now this could fully come back on us, and we would still have made money. We were risking like $400 for our stop from 780 to 810, and we've made $2,000 with 20 contracts, 20 micros. I mean, that's a good risk to reward to me. Listen, like again, this is I want to show you guys what that looks like with I just showed you all of the trades that I've taken today. I want to show you what that looks like on our actual graph. Like, we're gonna take losses. It's okay. Look at our overall curve. Does it matter? No. Who gives a shit? Like, you can't be scared to just, like, take L's. It's part of it, especially on a balance day. But, like, our risk to reward is always greater than our stop, right? Like, we know where price is going to go. We're in a 100-point rotation on either side. These are huge rotations up and down, and then we hold our mid, and then we offer our lows, and then we go right through, right? Like, this then becomes a solid trade. There's no reason to take huge L's for stuff like this. See if we flip and then continue down. I don't know, man. I know balance days can be really rough for people. And that's why I recommend that if you are uncomfortable with them, that you just don't trade them. But trying to tell you guys not to trade is like, I don't know. It's impossible. Yeah, I don't know. The time was. Trying to get you guys not to trade is like trying to get a smoker and not to smoke another cigarette. Like, I don't. It's just impossible. But then what's crazy is like you will trade, but then you just won't listen to what I'm saying. Like I don't know. I don't know, man. What's the point? See if we keep going down or if this is all we get. I'd like to see a lower high here with our 20 to 50 to hold offer. Got 3 minutes left on this candle. Break of our balance lows is great, but we've come down into this liquidity here on ES, which is giving us a bit of a lift. Need to see if we can flip this. Russell's doing literally nothing today. It's just down, but slow. I'd like to see our pivot here hold and then see if we can get back below this 700. But if the offer can flip 700s, then we can get another leg down into 650, I think, for sure. Just gotta watch to see what happens here. I'll be right back. Are you setting limit orders? Um, for main targets, yeah. But most of the time, no. I'm just buying in lots of 2 or 5. But there's no reason not to set a limit if you're uncomfortable with the zones. Like, I should say that most of the time I'm marketing in. My fill for the last trade was a limit stop that then filled me in the opposite direction. Right, so like my short at 780 was my stop from my long at 810. So like that's a limit trade, right? Because like remember I stopped out here, and then it immediately filled me short because it stopped. My bid at 810s flipped to an offer at 780, and then my stop out was over 810s, right? So then I'm just sitting in this position looking for this downside move. I'm comfortable with this risk. If you are uncomfortable with this risk, you would be looking for this first rotation and then looking for the reoffer for the lower high. And then you could be marketing in here, following our pathing. I don't care because I'm trading within my risk parameters. Having 30 points of risk might be a lot for you, especially if you're oversized, which I know most of you trade incredibly oversized and overleveraged, right? Like incredibly overleveraged for your account size. I, on the other hand, trade incredibly underleveraged. So I just let the structure play and let the trades play out personally. So when I flip because I think the trade's invalidated, and then I just let it be. If you want to trade over leveraged, you're going to have much tighter execution because you can't be wrong very often or you'll blow up your account. Which seems like kind of a like you're setting yourself up for failure because being right, 100% of the time is just within your whatever risk parameters that you're setting for yourself in your over leveraged position is just like it's unattainable. It's completely unrealistic. So I'd rather just like lower my risk and then trade within our structure and let that play out, because that's a much more realistic option compared to expecting the market to do what I want in high leverage. I don't know. I hope that makes sense. Just like let our zones play. And then let your runners run. Like our runners are doing so much work for us right now. Yeah, like here's a good way to think about it. We'll go through this. If you were playing off of our levels, which have been the same the entirety of the day, which is where we identified our 910 to 940 and our highs, and our 810 to 780 lows, and you just played with limits today, and you did nothing else, You see what I mean? Like you would have been stopped once. Just playing balance. Just playing with limits on at R2 pivots. And then taking profit into mid and then allowing a runner to go to the highs. You would have been stopped once. Like, I'm just showing that because, like, I think that people are overthinking this, and that's why I said, like, you're overthinking this, you know, a lot, which is, like, just to let the trade play. Like, if we can push back over our 810s, it's an immediate rotation up. And then your risk is this. If we stop out, okay, you'll be all right. You're taking, this is an L, but it's worth the risk for the upside. Just look for the pop over and then play it up. This allows for you to be break even here into our mid, and then it allows you for another full, you know, two points of R or risk to reward if we get the full rotation. Like, it's so worth just from a risk to reward standpoint. And then if we flip below it, then it's the same thing. It's to the downside, you know. Like we're playing with such a very clear area of invalidation that it just makes sense to try it. On any look above, like this then becomes the bid to the mid. Just let it be. The more that you like get finicky with it, and the less you just like allow things to play, the worse off you're gonna become, because you're being emotional and you're not just letting things be. And like if you're taking profits too early and you're not mining your reward after taking huge L's, right? Like you're taking off your size too quickly because you took like a dramatic loss beforehand, then it's going to be almost impossible to recover, because again, you're probably trading at a negative risk to reward if you're manually closing your longs, but you're letting your stops limit out. It's probably a negative risk to reward, which then means that you would have to have like a 95% win rate to be positive overall. Like, you would have to be winning in an unreasonable amount of time if you're going to be closing your winners at 0.5 risk, but you're allowing your stops to be at like 2, right? So like that, what I'm saying is like if your risk is larger than your reward and you're trading like this, it's going to be very hard to be a profitable trader overall. You see how it's like a 0.5 risk to reward here? Because you're emotionally closing, but then not allowing your size to play out. Which, and again, like you can take off risk at 0.5, but you have to then have more size on, right? So you can take off 2, right? If you're trading 10 micros, then it's fine to take off at 0.5. But like if you're taking off, you know, one of your 2 contracts at 0.5, and then you allow that to then stop out for the full risk instead of a break even, you're skewing your reward. So if you take off at 0.5, then you have to move your stop to break even, or you're skewing your results, right? You have to account for where you're taking off. You have to then account for where your stop is to make the trade profitable. I hope I'm not... I feel like I'm rambling, but... like once you understand what I'm saying and you get the, like the logic behind it, like it's just probabilities, man. Like I don't know. Like forget the dollar value and just think of it in probabilities. And if you can't forget about the dollar value, it's because you're probably trading too much, right? You're trading too much size. So it's emotionally affecting you. instead of just letting things be and playing like the our zone to zone with clear risk to reward. Like if the dollar amount is affecting you emotionally, it's probably too much size. Like the way you get big runners that give you like the big points. How do I word this? I would rather be in a position that I can hold for longer than trying to scalp my way to the same PT, like the same amount of profits. Every time I put a position on, and every time I exit a position, if I'm not, how do I word this correctly? I would rather stay in a runner from a higher position that I don't think we're going to be able to come back to, rather than trying to enter and exit over and over again by trying to, and having to be right more than I'm wrong on each and every one of those scalps to try to make up for my, how do I word this correctly? Here, let me do a visual. I would rather stay in a short from here or here than try to trade this back and forth over and over again, because every time I enter the market, I'm putting risk on. So if I can keep my risk from my initial position and take off, and I can't speak today. How do I word this, man? It is better for me from a risk standpoint to stay in a runner and allow that runner to play than trying to enter and exit positions over and over again, scalping the market, because it requires me to be right consistently over and over and over again at a lower price point every time. And my risk goes up the lower we go, and I try to continue to scalp in that direction. I'd rather just stay in that position if it never invalidates, because we've already taken off our initial risk, and now it's only reward, right? So I have no skin in the game. I only have unrealized profits in the game. We've already taken off our risk. So it's a much better position to be in from that standpoint, because I don't have to manage it. I can allow it to just play. If I have to constantly, enter and exit, enter and exit, enter and exit, you have to think that we now have to be right more often than we're wrong, which we are, granted, but nothing has invalidated on the higher time frame trend, and so there's no reason for me to do that if I don't think that we're going to revert back to that target, right? I can just stay in it. And when I get my big runners, it's because we never invalidate, and I just chill in my long because nothing has changed in our overall trend, right? And that, like, those positions are the best positions because I don't have to be emotionally attached to them. I can just let them play. Every time I exit a position from a higher low, right, and we're in a downtrend, from a lower high and we're in a downtrend, I'm putting more risk on. And my probabilities of being right are worse and worse on every rotation that we do. Right? Like if I'm in from these highs and now I'm exiting and now entering here, my risk to reward is worse because of that. Is the trade probability still okay? Yeah, it's fine. But now we understand that in this range, we now have half of the reward potential. Does this make sense what I'm saying if I visualize it like this? So you have to be willing to, you have to understand that your reward is much less in the sense of what our overall, oh, sorry. It's half of the reward with the potential for it to fully come back on you and you still being right. That's the problem, is that we're still in a balance between here and here. But because you're now interacting in the mid, this can still come back up on you and come back to our originally offer and still come down. And you could be stopped out here, but the downtrend is still intact. So you always have to be aware of like where your best risk to reward is and what does it make sense to take off full size here and then look for another entry if we know that our target is still to this downside and that it can come back up and you'd still be right and then you'd just take another stop here. So now you're taking two, I don't know, man. Hopefully I'm making sense. This is why I said, like, unless you're good at scalping, like, don't interact in the mid. Just, like, hold from the highs. Hold from the lows. Because, like, you are more wrong than you are right. And so if you're interacting in the middle of the range, you now have to make up for multiple stops at the mid, and you won't be profitable in the balance. You get me? Because every time you stop out in the mid interacting here, and, like, granted, like, these trades are profitable. Our zone is good. You would have been profitable more than you were wrong. But think about the amount of times that if you didn't flip and you tried to short here and you got stopped and then we rotated back up to our highs, you now have to account for this loss. And nothing invalidated about our balance, right? So now you have, this is all loss, but nothing is invalidated about the overall trend. So now you have to make up for these realized losses on the backside. So even if you're profitable from this high, you are taking off your risk here, right? So now this trade is break even for no reason because you decided to diddle in the middle and you didn't let this trade invalidate and then play this rotation back up, right? You let this stop back up into these highs, you got scared, you closed your short into this high, and then we rotated back down. And now you've taken a loss, and now this entire rotation when it comes back down is going to just be a break even on the day for you because of your bad execution, your poor execution inside of a balanced range. So interacting at our edges and allowing these trades to run is going to be your best bet for profit, right? And once you get better at scalping and willing to, put risk on into these edges and allow trades to invalidate on the look above, with a very clearly defined risk instead, it's just like your positioning matters so much on a balance day and where you're interacting, or you're just going to end up in this awful environment where you're taking break even after break even, but we've gone nowhere and nothing is invalidated, right? Like nothing's invalidated here. Our short is still in play. Literally nothing is invalidated. Have I stopped out of my position? No, I'm still in my position from 780. We never stopped out over 810. Nothing is invalidated. Can you play this position? Sure. But we've already taken off, 70% of our position here. We've already been fully profitable. So now I can just leave this trade on and allow this to play for the overall downtrend that we're in. I don't have to worry about it. Every time I close and open a trade, I'm skewing my risk to reward if we're in from higher. You have to think about it from that perspective. Like it's super important. It's like, does it make sense for me to exit this position? Do I want to be adding risk here? Has anything invalidated? Has anything changed? Sometimes it does, yeah, and it's worth flipping, but like, I don't know, man. Like when we have very clearly defined ranges, just like trade your edges, take off into the mid, and then leave a runner for the high. Let it be. Like these, like balance days can be like some of your most profitable and brain dead days if you just allow it to play. But when you try to overmanage positions, you're just like absolutely screwing yourself. And there's your full rotation here again from our 780, right? Like not literally nothing's changed.
Hello, everybody.
Yo. And it's the same thing on ES too, guys. Like nothing has changed. It's just a hold of our balance low as resistance. Over leveraging is for the dopamine hit, not for PNL. Yeah, exactly. And what's crazy is like it's such a like like you're looking at like short-term satisfaction to post a screenshot rather than like the long-term dopamine drip of being a profitable trader. It's so dumb. Like fuck your fake internet karma. No one cares. Trade for you for the long term. How you doing, man?
I am just fine. I'm alive.
Okay.
That's where I'm at.
Alive? Yeah, huge.
Yeah, right.
You made it another day. Big.
Always a good start. True. Yeah, not much else to report, Jason, you know? Interested to see if we maintain balance all day. Think we probably might. I'm surprised Trump did the Fed chair stuff so early.
Yeah. Is the new spot working? I feel like it was talking
Yeah.
earlier, but I don't know. Dude, this is like the biggest like grift I've ever seen with X and then the merge into XAI and now the merge into SpaceX and now the potential merge into Tesla. What an insane grift. So all of these venture capitalists and private equity are going to just dump as soon as this goes public all of their Twitter shares.
I
Insane.
am not as versed on the new.
Okay, well, X was a completely unprofitable and awful investment, and all of the private equity that Elon Musk took in, the people were pissed because they were like, "Yo, we just bought into this company for an insane evaluation, right? Like they completely overpaid." And then he then to make appease combined X with XAI Grok to help get new capital in and to save the private equity who was, you know, basically a dying ship, right? It was just like going underwater. And then when private equity ran out for Grok and they couldn't get any more money because that's also, and they're wasting $1 billion a month training Grok, they then decided that they were going to combine with SpaceX, which is his like only actually profitable company. So now all of the equity that was in from Twitter, the initial investors are now getting SpaceX shares. And then when that IPOs, they can then dump on public traders. So you can now sell maybe like the worst private equity trade in history will now be like one of the best because of them just combining companies. Like that's crazy. So all those people who privately invested in Twitter are then now going to have SpaceX shares, and they just came out today saying that SpaceX is thinking of merging with Tesla. So it's going to be like it's like a $3 trillion company if they do
Yeah.
that.
Yeah. Actually, though.
Like that's insane.
Data centers in space.
But yeah, so Tesla shares are up 5% because SpaceX in merger talks ahead of IPO.
Oh, and all like
Spot gold
and all
falls
these
10%.
other AI companies too. If when they go public, it's gonna be crazy. Just in general for the market, like there's gonna be such a regime shift.
I just don't understand. Like they're not profitable, then they never will be profitable. It's just a sink. Crazy. Companies are burning billions per month. Like it's not sustainable.
OpenAI just needs to like buy a GameStop and AMC and get all the crazy people on board, and then it's over. They'll
It's
have
the
funding
same
forever.
people.
Yeah, that's true.
It's already the same people. Only people who are using AI are people who are grifting. It's the people who are drop shifting before. It's the people who it's the bottom of the barrel people who are always trying to grift and make money off of others with the newest hottest thing. You think anyone is using AI video for anything other than to try to sell it to someone else? Artists aren't using that shit. No one who is using AI is using it in a productive manner yet. Like there's it's just insane. And YouTube just said that they were going to demonetize all AI content. So it feels bad for all those people who are trying to make AI slop for shorts and for full videos.
Yeah.
So like now what's the use case for like Suno and all those other video models if they can't even make money off of it? Right? Like everything has just been to get clicks on Twitter right now for engagement bait. That's like the AI use case.
Wonder how that rat race is gonna go too, if it ends up being kind of like the video game cheating where they say it and then like I guess it's different because like the actual companies in terms of like then them actually being able to like filter for it as a YouTube as the company. Um, it's gonna be interesting how that ends up working out.
If Musk combines these companies, yes. Hmm. Did silver really make a 22% downside move? Holy. Oh yeah, it lost like 20K from highs. Oh my god. Ooh. it went into bear market territory in one candle.
Hell yeah.
Is Surf here? No, he's gone. Oh wow. Not only are they just demonetizing, they're deleting AI slap channels off YouTube.
It's crazy.
Right at 1 p.m. Eastern Time, we have
Some
the
poor kid
Baker
just
Hughes
woke
data.
up and
Total rig count
can't
prior
make
at
his Lambo
544.
payments.
Oil rig count prior at 411. We're also expecting comments from ECB's Bush.
Lord.
Spot gold falls 10% in the biggest drop in decades.
You get nuked trading gold, Kev? No? Good. Just worried about you. The gold and silver move that happened, I think, was bigger than the. I'll have to do the math on it. But I think it was a bigger crash than the move that happened from COVID in the SPX. I think there was more liquidity drained in silver and gold there from that reaction at those highs than all of the liquidity that was taken in SPY in the COVID crash. Just to like put that into perspective of how like much of an outlier that move was. Yeah, like billions were liquidated.
Spot silver heads for worst daily performance on record, last down over 26.5%.
News? I didn't see any news. I don't know. I mean, it was just like unsustainably high. Not sure. I mean, it was a 25% drop in 24 hours. 1.5 trillion in value deleted. Just in silver alone, not even talking about gold.
I've been sitting here this whole time. I am dealing with this weird Tradeify issue
What is it?
where my level 2
Wind at 1 p.m. Eastern Time here. US
renews
Baker
on
Hughes data.
February
Total rig
1st,
count prior 544.
but
Oil rig
like
count
it's
prior
shut
411.
off right
Also
now.
expecting
Like
comments from
I
ECB
can't.
push.
I'm only top of book.
That is
So I've been
really
like
weird.
messing like with this, but like when I go into my subscriptions, it says like renews February 1st. So like I don't know. I can't figure this out. It's like there was like a lag in the system where it thinks it's like a different day. I don't know what to do. I feel
Try,
so blind.
yeah.
Like like it's actually crazy how blind I feel.
Try logging in on the browser. See if
That's what
it's.
I just
Oh,
did.
okay. And it's still the same. Weird.
Yeah, because I still have, and I can't do anything because I still have the subscription. It's
Yeah.
just not
Like working.
yeah. I mean, I guess because it's weird because everything else is working too.
Mm-hmm.
Like footprint and stuff is fine. It's literally just the DOM.
Yeah, so that means you still have level 2 footprints working.
Yeah.
That is very odd.
Surely expecting US Baker Hughes oil rig data.
Lows taken here on NQ, full rotation here on ES off of our pivot at our highs, rotating down. Let's see if we get a reoffer here at 700 for this rotation down to 650 to 630 for that next leg. I'm still in my runners from 780 to 810. Rotating down now. Coming back into our liquidity pocket here on ES. Offer sitting at 660 on NQ. Just took off one more here on NQ. I have 2 left. Looking to see if we can flip or if this is all we get. I think we get a reoffer of our edge on the
Total
breakdown.
recount 546, 546. Russia's Special Envoy Dmitriev says he will be in Miami on Saturday for meetings with members of the Trump administration, according to sources. And oil rigs 411. That's the Baker Hughes oil rig count 411.
Someone in YouTube chat said, always ranting. True. I've got a lot to say, bud.
Yep.
You watch the stream, you pay the rant tax. Yep. Watch your offer into 700, 720 for a lower high. If we're going to get another rotation down. POC of previous 15 is up into that 720. We're watching to see how we interact into it. We're looking for our offer to be sitting here and then a rotation further down if it's going to do it. If we flip back over, then expect us to come back up into our value high of that candle, right? Up into here. So just look to see if our offer sits into this. That would be the most bearish move that we could do. Not then we rotate the range.
Republican leader Thune on government funding says we are getting closer.
All right, boys, we're coming up into POC, a previous candle here. This is where you watch to see if we get an offer, and then we can flip back below 700s if anything's going to happen here. That's going to be new. Just following our pathing, like we talked about. See what we do. Trade is immediately profitable off of POC. Take off your first risk here if you want. We have to watch to see if this bid is going to be here at the 680. For the higher low. Watch to see if offer can stick here for the lower high here at 700. You're stuck between. Gotta flip. Need to see sweepers take out 680s, so then we can go on our merry way. If higher lows continue to maintain and we pop over 720, then I think it's kind of invalidated short term. You'd need to rotate up to 60s first before we would go. So like, let's say like we bid here, then you'd be looking for this rotation up first into these highs, and then a failure, and then a step down. If we continue to maintain that, that's at least what I'm going to be watching for, is how we interact here. Now that we've hit that POC from our previous 15. If like we can't sweep through this 80, that'll be like we might have to go higher before we can go lower kind of situation. Offer sitting at 701. $701 offer held, rotating back down. Like I said, lower high has been put in. Again, great to take off first risk if you want to. If we can't get below this 680, this is your first target. As soon as we sweep below it, should be able to take out lows and then head down pretty quickly. But we got to get below this buyer at 680. My stop on my remaining contracts is sitting at 24 now that I've taken for our 1-to-1 off of our 700 and 710. 680 offer flipping. Again, my stop is 724. I've taken off from our 700. And now I'm looking for new lows, ideally into 630, 650. And then full target would be a push down into like 500, 510. If we can get this next leg. But good hold of our POC. Always look for that offer there. And then we just look for the lower highs afterwards. Trade should be free now, following our pathing.
Gold
50 seconds
further
to
extending
new.
declines, last down
15s.
11% now. That's at $4,786.85 an ounce. Gold and silver suffering their biggest slide in years today in a whipsawing reversal of a scorching rally that lifted prices to all-time highs. So gold fell more than 10% to crash below $5,000 an ounce, exceeding the largest intraday drop seen since the 2008 global financial crisis and the biggest daily decline since the early 1980s. Silver plunged more than 26%, which is a record intraday decline, as the sell-off swept through the broader metals market. Elsewhere, copper prices fell almost 4% in London after surging above $14,000 a ton for the first time on Thursday, its biggest intraday jump since 2008.
Just cuz.
Just cuz. Alright, I'm getting up trying to fix this stuff. I'm just flying blind. I said though, it's so weird that like all my indicators are working, footprints working. Literally just the DOM.
Yeah, it's a bit odd.
Let's see.
Into our 55 to 30 area here. This is your next target. Offer a hold of our 680 from our look below, and then hold following pathing. Again, the trade is free. Well, let's see if we flip. If we flip below 630, I'd be looking for like
$629 billion at the Fed's
520,
reverse repo
490.
operation.
But definitely an area to take off some risk. Hopefully you made some money. This is just a value shift here, right? So you could look at it from two different perspectives. The perspective one is that this was a fixed range POC to value low that we held from a look below, so a failure to get back into our range for the continuation down. And the second way to look at it is that this was a retest of our POC off of the 15-minute and a look below and continuation down, right? So you had a higher time frame look as well as the lower time frame, and this is why we were looking at both of these. I'm gonna put it in chat just so that you have it, but both were on screen, both showed, and trade is good and free now. And we got our sweeper on the look below 680 for that secondary move into our 630 target. See if we can get continuation here. Again, target would be like this, like 590, 600, and then a flip of that, I would be looking for 520 to 490. How do you know where to draw that fixed range? It's just where we consolidated, man. So we already have designated this as a balance. So we already have this as our balance low and our balance high. So what this is to us is a hold and a distribution that has been formed below our previous balance. So I just took our break outside of our previous range that we've already called balance, right? And we have now created a new choppy range below it, right? Where we held our offer here. So the fixed range is just from our breakdown and then the price that is followed after the breakdown that we've chopped in between, right? Does that make sense? Another way to look at it, if you don't know how to draw a fixed range and you want a visualization, I'm going to full screen this real quick so you can see the daily volume profile, because I think that's probably helpful. Do you see how we're below on the daily profile? Here, let me turn off all this other stuff. Do you see, I'm going to turn off everything for you. 1 second. Do you see how this is our value between here and here? This is our value high, this is our value low, this is our POC. You see how we're holding our value low as resistance? So everything that's below this is that area that I just drew. I'm going to turn on drawings again. Do you see? So this is our fixed range, is the price that developed below our value low in the daily. So this tail that we built out, this node that's below, outside of our value.
Silver extends
And then our
further
offer is
declines,
just
last down over
that
30% at around
offer
$80.49
push
an
down.
ounce.
That makes sense? So that's how I knew where to draw. But again, like a good way to always look for a reoffer, or a good area to keep in mind, sorry, losing my voice, is we look for on the new 15-minute. So if you're not in a trade already, I always tell you to try to wait for the open of the new 15s, and then we look for the reoffer in these POCs to value areas, and then use this as your risk to then look for that continuation down. So we've got that starting our downtrend. So when it coincides with what we already are pathed on, what we're looking for here, it's like, oh, okay, that's what I want to see then for this continuation down. I want to see this offer and hold that lower high. I want us to hold that value low to POC, and then I want to see that push down. I don't know. Let me know if you have
Time now
questions.
at the bottom of the hour. We're expecting comments from Fed's Musalem.
Really interested in this
Musalem speaks
interaction
on
around
US
20
economy
on
and monetary
ES.
policy at the Center
5
for
points
Business
above,
and
but
Economic Research at the University of
It's sitting at
Arkansas
600
Grand
into
Ballroom.
it.
Text and Q&A both expected.
See if we can flip this for our full move down into that.
Gold now on track for its worst daily
500,
performance
520.
since 1983, last down 12%.
What a trade. Are people in runners? Are we good? What's going on? This is previous day value low. I think we have one more leg. But finding a bounce here makes sense. And then let's
The
see if
Russell
we
2000
can
index extends
get one more
declines
leg
to
down into
2%.
target. Again, I'd like to see like 520, 500. Watching for a offer as we push up into this, into our ETH low, seeing if our sell side sits here. This 640, 660 area is where I'd want to see it if sell side was going to be putting in a lower high. If not, then we'll probably rotate back up, retracing a lot of this short term, just back up to the POC of that previous candle. Our most bearish pivot here is, again, into this 640, 660. Watch to see if an offer steps in here, we absorb, and then we rotate back through. I think if we're gonna get one more leg, I'd like to see that last leg, something like this, but gotta see it first. I'm still just in this runner. I'm fine if it
Same thing
retraces on me.
Yes, here. If you took off 20, this should be taking off into here, and then if we get back into Globex, same structure as NQ. It is a little higher though into the last auction.
I mean, I don't really believe in this move. But we've got a minute 40 until new 15s. We'll look to see if they trap here, and then if we rotate down afterwards. Nothing has changed. Like, downtrend is still intact on the higher time frame. Liquidity is incredibly poor on this candle. We'll watch what happens. Bid is resting at 650. This just looks like a look above and fail to me. Trapping kind of thing, but we'll see. I think downtrend's still intact. There's been no dramatic change in anything for me personally, but we'll know in a minute when new 15s open. Just watching our pivot here at our 640, 660,
1 minute now
seeing if we
to
can build.
expecting the text release from Fed's Musalem.
We'll watch to see if we trap and then look back below and offer for continuation down, or if this is able to hold in a new 15s. I don't really have an answer for you because it's just kind of an illiquid move, but we'll see. What I mean by downtrend is still intact is exactly that. So we'll see what happens.
Text release in 10 seconds.
News in 10 seconds as well as new 15s.
Fed's Musalem says, I could support a cut if new evidence of job market weakness. If expected inflation falls to target, I could support a cut. Inflation is unlikely to accelerate in the near term, and policy is well positioned to respond to the Fed's objectives. Risk of substantial
Offer at 80
deterioration in the
holding.
jobs market is lessening.
Need to see the look below 40s or bid will stay sane here, and then we'll look for a higher low for
The Fed's
rotation over
Musalem says,
720
I
for
expect the
continuation.
economy to continue growing above trend, boosted by credit conditions and fiscal policy. Further interest rate cuts are not advisable. Policy is now neutral, and the economy does not need stimulus. Musalem says not all of the current inflation is from tariffs.
They're gonna trap
Musalem
us or
says, I
what?
hope productivity growth continues, but it's too early to depend on it. So to clarify, Fed's Musalem says risks are balanced and further rate cuts are only needed if the job market were to decay or inflation falls.
POC from previous candles at 40, FYI. So like we're watching to see if we flip 40 or not. If that wasn't clear already. $40 to $60 is where the bid is trying to build, where our seller was stepping in.
Treasury yields
We're
edge
watching
lower
to see if
as
they
gold
can
and
hold
silver
us
prices
above,
tumble.
or if they trap above. Trap above, or offer and flip below. POC a previous candle being tested now on both ES and on NQ on footprint. ES held our RTY held our pivot at 620. We're watching to see if we can flip here. Should see a reaction here as Russell comes back into our lows. This will be our reoffer to let us know if sell side's serious or not when we get our little bounce here on Russell as we test back into our 40 to 60 on NQ, and that'd be my guess. Watch to see if that can hold and if we can sweep through. this weakness can hold on NQ, we're in a good position for the seller to keep going with it. Watch as we push into this. Get a little volatile here on NQ. Regardless, see what they do. Let me get the trap.
We have posted Fed's Musalem's full speech on the feed for those interested.
This is now 1-to-1. If you're playing off 40 to 60.
I love those Fed comments. I expect inflation to go down, but it could not go down.
True.
It might go up, but it could go down.
Not wrong.
I hope productivity continues, but we don't know.
You'll probably get another opportunity here. Probably. We'll see. Again, it's just like this 40 to 60. It's got to hold on retest. As long as it's doing that, then we should break lows. But you should get your re-offer here if it's going to do it. We've gotten our 1-to-1, so the trades break even right now. We'll see. Russell's gotten its higher low at our value edge where we thought the bounce would occur. We're watching for the offer to ideally stick here 40 to 60 and then take out lows with this liquidity above offsides. But whatever happens, doesn't bother me. I'll be right back. See, look, you weren't too slow. 40's held offer, so you got your 1-to-1 again. See what I mean? Hopefully you understand what I mean by 1-to-1. Cause we haven't seen the invalidation yet, but this is your risk. This is your reward, right? So we've already broken over. So if you take off half here, the trade is already positive. And if we can break these lows, I'm still looking for this as our target. See what they do. It's a weird area because we're holding higher lows but lower highs, right? So you've got yourself a little pennant. Get a decision afterwards. The reverse megaphone is crazy. Time is it? 140. I'm probably gonna head out here in a second. I just wanted to see if this is gonna play before I left, but it might be a sit and hold while I leave situation if we just never invalidate. Instead of me sitting here for an hour waiting for us to go to our target. It's crazy how these same trades in same areas just continue to work. You can just like look left. We can see all of our previous setups that we've done to the same targets and same areas like over and over again. Ugh. It's like, how many times have we played off of this 640, 660? Well, we did it yesterday. And then if we go left even more. Like, we are looking for the same things before. This is our 640, 660. Do you see how many times we've played the same fucking short? Oh, it's so stupid. Just keep scrolling. Have you guys been paying attention to the Molt book?
You
With
know what that is?
the AI agents, social media, where they just talk to each other in dead internet. It's basically like Reddit, but just for AI. And
Crazy.
they just like shit post the entire time. And you can just like add your AI agent to talk on this. But I'm just like, you can like read through and it's just slop. And it's just AI talking to AI. And you can like read their fake conversations, chatbot to chatbot. I don't know. It's very odd. I don't know, man. I just stopped over 60 on my runners. See if we look back below and offer, or if we flip and rotate back up to our original sell at 700 to 724. Just this upper rotation. I need to see us flip above this for anything new, or this is just going to retest our original sell off of a failure to really do anything. RTY held our pivot, which is allowing this move up, so we'll have to wait until we get back up into 20 before we try again on sell. Same thing with ES into our value edge, I'm assuming. We come back up into this. Just the hold of our lows on POC on ES. I don't think anything's invalidated about this area. I just think that it's going to take a bit longer because it's lunch. We'll see though. See if we flip and hold. Upside pathing again would need to flip 20s and then bid for anything new. Watch as Russell comes up into the top of our oscillation for lost momentum in the market again. Same thing with ES into our value edge as we approach. We need to flip these for more. Or we'll just do this trap again and then look below. The bid is definitely trying though. It's very two-sided, 60 to 40. So as long as we're flipping above, we'll watch to see if it can hold and then get back over that 720. If it fails, then we'll look for that offer back below 40s and then set your stop at 60 and let it play. I don't know, it's just a pivot. If bid's gonna hold this offer at 80, we'll little rotation down, and then 60 to 40 will maintain for the rotation up to 720 would be my guess.
Keep in mind, in 10 minutes' time now, at the top of the hour, Trump is due to be participating in a policy meeting.
It's just a clear flip. We saw where our offer was last, and then we saw the failure, and then the rotation through. This attempt, we're seeing the bid off of that offer, and then the rotation up. It's just a flip. Coming back up to our original sell. Let's see if we can flip above.
If anyone's still holding anything from the ES20, this should be primary as we look back in to our daily value.
This is our original sell. We need to flip above and hold for anything new, or the same offer is here. Previous day POC here and our pivot on ES and NQ and door highs, as well as RTY into highs. So if we flip, and then we can rotate up. If not, then it's the same sell, and then we look for the same rotation down. No change. Note this is also ES into our 15-minute VWAP as a reversion.
DATScan changes the CPI release date for the Canadian CPI to February 17th.
Watching our offer at 700, see if they put in a lower high or if we can flag here and pop over our 20s. There's your offer, lower
Apple
high
loses more
700.
AI researchers and Siri executives in the latest exits. So Apple AI researcher Wang also is joining Alphabet, Google, and Meta Platforms is hiring at least 2 other Apple researchers. That is both Meta and Alphabet seem to be poaching some of Apple's AI researchers as well as their Siri executive in the latest round of exits.
Meta buying everyone else's staff has never worked out for them.
Not wrong. Just do mediocre work for 2 years and then have their vested options and leave.
In 5 minutes' time now, at the top of the hour, Trump is due to be participating in a policy meeting. There's no sign of a live video of this event. We'll keep you
This is
posted if any
ES into view
comments
up.
do come through, though.
RTY has a little bit more room to view up. We're watching to see if we can flip our 20s here off of our bid off 680 liquidity. Rotation up to 60 would be next target, and then 80. If we can hold here. If not, it'll be a trap, and then I'll look back through. See if we can flag.
Feds Musalem says the FOMC meetings are about persuasion. The best idea wins. Feds Musalem says independent monetary policy means better outcomes.
It's your 1-to-1 risk off into 40 if you're playing off of our flip of 700 to 720. Next target is 780 to 810 to get back into our previous balance. If we fail, that'll be our target when where our sell side sits. Again, we need to flip back over our 810s for anything more. You have now successfully played the flip and rotated it up, and we have gotten this trade in for free now. Reversion target is, again, 780 to 810. We'll see if we get any more, but risk off as we get the pop.
AP News reports that satellite photos show activity at Iranian nuclear sites as tension rises over protest crackdown. So satellite images show activity at two Iranian nuclear sites, which is Isfahan and Natanz, that were both bombed last year by Israel and the US. So roofs have been built over two damaged buildings at the sites, which may be a sign that Tehran is trying to obscure efforts to salvage any materials remaining there. The new roofs block satellites from seeing what's happening on the ground, as Iran has prevented access to the sites by inspectors of the IAEA.
We have posted the article from AP News on the feed for those interested. Fed Muslim says inflation expectations are consistent with 2% target.
Okay. Pushing into target here. This is our 780. This is your next target off of our flip of our 700, 720. This is our previous low of balance and our reversion target as we push in again 780 to 810. If we can flip that, then we can play our upper rotation that we played all morning. If this fails to hold, then there's not really much here. We'll just play this rotation back down. Again, like this is just the flip. This is how I have mine set up. If we are able to breach, if not, then there's no change. You can see that I stopped out from our 700, 720 on reoffer and then immediately flipped bid at 720 following our pathing, and have now played that up into our 40 for our 1-to-1 risk reward to make the trade break even, and then we've played it up into 780 now, taking off to make the trade fully free and profitable. Other than that, nothing really to do here. If we can flip over our 810s and bid, great, we go up. If not, then we've already made profit and nothing matters. Playing pivot to pivot. Oh, people on YouTube can't see. I just remembered.
Well, I know a way to fix that.
Well, let me post the full. I'm about to leave, so I'm just gonna post this real quick. You can see we've stopped out twice, or 3 times today on our pivots, flips, and then just played the flips back up. And those have been our only L's today. Other than that, everything has been a profitable trade. Yeah, kind of. I mean, they're basically just our zones here. Yeah. It's the same thing. But I'm just like, let shit invalidate on me. I don't care. We've already taken profit off, you know? So, like, what does it matter? Listen, I let a trade go back on me yesterday that I was up over $1,000 on, and then flipped after it stopped me out, and then we made like $3,000 in the opposite direction. I don't care. Like, I don't care. I let that trade that I was up $1,000 on go back to break even, and then we flipped, and then immediately went up. Like either it holds or it doesn't. I'm in a runner. That run. Until it invalidates. Yeah. I don't know, man. I just like on balance days it's hard because like you just kind of have to pick like larger zones to play around, and then like I just like really define my areas, and then like I just play them. Like I don't care. Like if something changes dramatically, sure, but like I know that like our overall zones will be profitable and it'll be okay. Like on balance days, we're gonna take a bit more of a loss and we're gonna have a bit more unrealized because we're stopping out more on like with size because we're just playing pivot to pivot. But like we're not wrong for very long, and our losses aren't very big compared to our winners when we are right on balance days, right? So like they might stack up, they might add up, but like the overall curve is very solid still. We just play zone to zone, let the structure play. I wish I could give you like a, you know, like a, yeah, like this is when you should care, kind of like, I don't know, you just kind of, I have to like talk it out more of like why I care about areas and why things matter. But like once I see it working over and over again, like I'll just play that level until it invalidates. I don't really, I don't know. I almost feel like you have to have like the narrative matters because it allows you to like be free from the P&L and just like let the trade play. And then it's like if then statements only, you know what I mean? And like you can reevaluate if it doesn't work after, you know, the first or second attempt and be like, oh, okay, like yeah, this I'm an idiot. But until like
Muslim
we
says
see
tariffs
something
are about
new,
half of current inflation overshoot.
like my logic will always be like an if then, where I'll just like, if we flip this zone, then I'll play it up to here because this is where our last known seller was, or this is where our last known buyer was. But like we had such a clear distribution in our highs today and such a clear distribution below. So like this is such an easy look for us to like if we can hold this POC and flip this, like rotating back up to this bottom of this balance makes the most sense to me. And then like if this flips offer again, then this will most likely be a pretty solid short again for the downside to our target. I don't know, like a lot of these levels, I have a pretty decent memory. And like I said before, like when we scroll left, we've taken the same trades over and over and over and over again in these areas. So I don't know. Like this is the same stuff again. So when I don't see like the same reactions where we pivot off of this, like I know we're gonna rotate up. Like if we flip our 660s and the 640 doesn't hold, then like this has led to upside. And like these rotations have led to our 720, which is this range before. You know, like these, like there's a bit of a memory. I don't know, man. I kind of stick with the script until the script doesn't work.
I think, Sauce, like, these have been a lot of the last 2 weeks of classes as well, right? Like, getting the higher time frame view, getting the lower time frame view, understanding where we've been, and then, like, always in the trade thinking, like, what would the most optimal counter trend, like, if someone was trading against me, what would they want to see? If you can answer all three of those questions, like, it becomes very clear what areas you need to watch. It's like if you're in a short, you can be like, this is the most aggressive buy area, and we sell through it. Like, there's your confidence.
Yeah.
But if you're only thinking my short, like you're not, when that does occur, you're gonna get screwed.
I think like one of the big things for me too is like when I see a failure to kind of go to my lower target, and we start to see like an active bid step in, it's like, okay, well, we're gonna revert to VWAP, right? Like we're gonna revert to our 15-minute VWAP here, and then it's like I have to look at that as like where sell side is gonna try to defend again, and of course it's like it is our pivot as well, which is nice. But when we see like this shift of POCs where we're no longer holding our downtrend, where we're holding POC previous candle as resistance, and we start to chop like this, like this to me, like this 640, 660 is like such a clear invalidation because we're no longer holding that lower offer, right? It's either like going to chop and balance here, or we're going to get this move up because we've failed to push lower. And then it's like, okay, well then we're looking for a reversion target. So like, what are my entries then for this trade? Well, I know that like if this 40 to 60 flips, we've already played this short twice to the downside. If this flips, I got to look for this buyer at 640 to 660 into our 700 to 720, because this is where our seller was last, where we took this short down. So now it's like, okay, are we going to be in this balance here? Okay, but if we don't see any interest from sellers here and we can't flip back below our 40 pivot, then I should expect that then we're trading in this distribution where we trade up to this target, right? Like if there isn't interest at a zone and I'm not seeing like our sellers step in where I think they should, right? All of a sudden we've segmented the market into, you know, 3 areas of interest. This area down here where I want to see sellers try to show their hand, this area here where I want to see sellers show their hand for a lower high. And then it's like, if we flip these, then I know where we're going to go. It's going to be this area here, right? So now it's like, okay, well, what happens into our 700, 720? If this continues to maintain, then we can look up and then we'll look back into this area here, right? So I just trade zone to zone, and it's like, if we hold on the reoffer of the validation, like if we instead flip this and then offer, like I'm going to play down to this zone, and it's going to be the same thing again, logic wise, like box to box. But like I expect our seller to be sitting here into the zone, and if they don't do that and we flip it instead, then I have to be looking for this target above. And like, does it always work out? No, but like we know when it doesn't work out, because then we don't head up here, and instead what do? Well, we get the look above, the fail, the reoffer, and then the rotation through, trapping these participants here. And this still gives us an entry, right? When we hold like the mid instead of going all the way up to the highs. So that's usually how I mark the market. And it's like, then all I do is just have my limits resting, right? Where like it either invalidates or it doesn't. And like I play that quite a bit. You know, like that's literally how I play the market, is I play the offer, my stop's above, and if we fill on my stop, then I'm long to the next pivot. You know what I mean? And it's the same thing here. Like if I stop out, then we rotate up. And I don't care because I've already taken off my first risk for 1-to-1, right? My first target is always whatever my stop is. So I make my trades free on invalidation. And then we leave our runners to actually create the profits for us. Right? Like these first risks off here are because our stop is here. So if we have a 20-point stop, I have to take 20 points. Right? So I'm taking off into 40 and 50 to make this trade free, and then I'm letting the runner run for the 80-point target. And it's the same thing for all of these. That's how I play, so that I even when I'm wrong and we don't get the full move, I'm at least securing and keeping my gain safe. We're never going out of our way. I shouldn't say never. Most of the time, we aren't biting into our P&L for the trades that we're taking. We're doing everything in our power to not go into our secured gains. We're trying to make trades free as soon as possible and then letting runners run. which is a different logic to a lot of other people because they'll just, it's either like, you know, it fully stops you out and it's invalidated, or we go to our higher time frame target. And for me personally, I just am not, I'm not that guy. I don't like big losses. Like levels either hold or they don't, and we're going to secure and we're going to compound and we're going to move on. If you're trading on a prop, you know, and you're over leveraging and you're just trying to get your first payout and that's all that matters, right? Like, okay, sure, then that logic makes sense. But if you're actually trying to like build, you know, and have sustainability, then you want to do everything in your power to minimize risk. I think the intuition comes from where the zones are and what kind of market type we're in, TFL, and then it becomes mechanical once you have that information, right? But you have to have the intuition of like understanding where and what first. Like those statements have to exist, so you have to have some understanding still. So that intuition part still is in play, but then it's like it's just the if-then statements for execution. Hopefully that makes sense. Right, like you still have to know your market type. You still need to know like what's happening in the book, and like those things matter and require in the moment thought rather than just like PA, price action. But once you start to trade it and you feel more comfortable in it and you realize that you can just trade zone to zone once it's established, right, you become a lot more confident because you realize like there's a lot less risk. You're not as afraid to take L's or have trades that, you know, stop out, because you're playing structurally and you're playing R&R instead of, you know, dollar value. And then all of a sudden it's like, oh, okay, I stopped caring about the dollar value and started caring about, does this mechanically make sense, and did I follow my rules? And then you look at the end of the day and it made you money. You know, the more that happens over and over again, the more confident you become in your system. You're going to be very scared at the beginning because you don't have a great grasp of why things are happening and if they're going to work out, right? You're so scared to blow up still because you're over trading or you're over leveraging and you're not respecting your areas of interest, right? It's not a probability game to you still. It's still like a dollar value game. It's a very different mindset when you start to just think of the market in probabilities rather than, you know, like, oh, I could be making this
House
much.
GOP leaders seek AI framework by the end of
Or I'm
2026.
going to lose this much. It's like, no, just like cut your leverage in half, man. And then just like build out a system for yourself that works. Stop trying to, you know, win the lotto on one trade. All right, I'm out of here though.
Enjoy your weekend.
You as well. If we can get over and flip our pivots, then we're in a great position. If this can flag and hold. If not, then we'll probably rotate back down again. But RTY is holding VWAP and pushing up. Things look good. We're back into our balance on ES. We're back to previous day value high on ES. NQ just has to flip. POC is attempting to shift here at 760 on the daily on NQ. So keep that in mind. Yeah, but you just want to see us flip back over our VWAP. And if we can do that, then we've got upside. If this continues to fail, then we already have our 2 distributions below us. All right, goodbye.
Peace.